All right, so I am basically gonna just say a few things. Um, Now, recently I posted, that was on Monday, I posted in the group about the manipulation going on in the market space with respect to the dollar. All right. And that now, although that pretty played out with respect to what dollar is doing. However, the method that we use is basically the same. Actually was on hindered. Now I'm just going to talk about the pattern and then fair value gap this evening. All right. Now, for every one of you, I think I also posted in all the platforms about ICT now on Twitter and yeah, and then the mentorship video on YouTube. So for those of you that are interested in that smart money concept, which I believe you all should be really interested in, you want to follow up that a you want to follow that up in on Twitter and on YouTube, right? Now, recently I was doing a live commentary that was Wednesday, Thursday, etc. on Twitter, and that's something you may want to pay attention to. So much to learn from that man. But recently, I think this was this year, he finally came out to do the live. What was it called now? Making it public, his method. All right. Now that's that. Now, why I do stuff like this is because I want to consider myself a bridge. All right. We don't claim what's it called now? We don't claim monopoly of knowledge one or right as touching what we didn't invent. All right. So right from the start, I make reference to who my mentor is, though I don't make it public to just any and everybody unless persons that are perceiving. So when you come on board, I'll tell you who my mentor is, who I follow. And what that does to you, it gives you a license it gives you that very broad scope to learn beyond what we have right here. It's not that it's within the confine of the method. If that tickles your fantasy, right? It gives you that opportunity to learn way beyond what any and every other person is learning. So you want to take advantage of that. And that's because I understand that students, what's it called? Students' knowledge sets are oftentimes limited to that of their tutor, mentor, whatever, unless they go on further research. So, and the space is voluminous. In fact, the mentorship video for this year, we started that January thereabouts. You go to the page on YouTube, okay? You will see it's about episode 32 or thereabouts. Now, every one of them are worth paying attention to. I mean what I'm talking about, okay? So I'm referring to inner circle trader, ICT inner circle trader. So I just dropped that. All right, so you want to pay attention, okay? Then secondly, I am going to probably give us a VM before the weekend, this new week, right? Or just before the weekend, yeah. Everybody, irrespective of whether WhatsApp or Telegram. All right. So for tonight, I just want to talk about fair value gap specifically. All right. Fair value gap. It's just a refresher course. Now, what we normally do is most of the time, in short, all the time, I personally believe that evening calls like what we're having right now shouldn't be maybe just once a month or thereabout because the bulk of the work is not on high side stuff, but I'm looking at means of doing much more commitment to everybody. So a lot of structuring here and there is going on behind the scene in the academy, just as we launched our app recently, Signal app. And then I told us I'm going to give us a major update just by the weekend, a major update. So what I'm trying to say is a lot of work going on behind the scenes. Now, you don't need to wait for anybody to make your progress. And that's why those groups are there. All right, that's why those groups are there to share. And also now some persons are just maybe unknowing to them bridging certain rules, but again, updates will be rolling out for everyone. So I'm using all those to say that you don't really need to wait for anybody to inspire you, all right, to inspire you to put in the works to learn, to see if you are making progress or not, all right. No, you actually don't need anybody to do that. You only need yourself to inspire yourself, all right. Now, for example, this call I posted in the morning about us having a general call today. I know most persons are busy. Now we just have 31 persons online, 31 persons out of over 300 persons thereabouts. So that's 10%, right? So a type of the academy is present tonight. But notwithstanding, what I also have to share, most of you that joined me probably this May and less than 3 months, you must have found that the meat of the course was when you finish the pre-recorded video that I did. The meat of the course is actually in those 12 months mentorship. I'm not kidding. Now, I'm using this to say that if you have not actually started paying attention to those videos, all right, and that's why I am a bit drawing back with respect to uploading recent recordings and live classes, because I just feel that people can become so overwhelming with information and they will not even know where to start, where to go from where they are, and that's not the goal, right? So that's why I'm not uploading from February or March thereabout. It's kind of deliberate to me because when I look at the live, look at what we have, I say, come on, these things are already so much. These things are so much that if you want to make the progress, you should be doing that already. So tonight's class will be quite brief, right? See, my voice is strange and I have lots of energy, but it's inherent. Okay, so I'm just trying to really pull stuff out of me. So basically, we're discussing that fair value gap that I earlier wrote there. Now, one of the questions that came to me in the last time we did a general call, when I asked for the question is, for example, you have series of fair value gap, okay? All right, series of fair value gap. And there is, of course, a break of market structure, okay? Which of the fair value gap will market respond to? Which of them will market what price is returning back? Which of them will price most likely return to? Now, before I go ahead responding to this one, which basically is my goal for tonight, I would want to tell you, for some new older guys, you must be aware of when I talk about the fractality of time. Fractality of time, that means price is related irrespective of the time. So what you see happening in the monthly time frame, okay, with the monthly time frame is also what is happening in the 1 minute time frame. All right. So if you want to actually learn more price action with shortest possible time possible, I would encourage or admonish you use the 1 minute time frame. All right, which we are going to look at. By using the 1 minute time frame, if you see price moving this way, for example, and then it breaks the structure, comes back, fill a fair value gap, returns. Okay, this is exactly what you're going to see in 5 minutes, this kind of movement. Exactly the same you will see in 15 minutes, the 1 hour, the daily, weekly, monthly. Yeah. So there is a relationship between all the time frames. All right, the relationship between all the time frame. Now, that's one. Then secondly, your 5 minutes time frame, if you are a scalper, your 5 minutes time frame is your refined time frame. Your 5 minutes time frame, I'm talking especially if you are trading, you are a day trader or a intraday trader or a scalper. Scalper can use up to 1 minute. I think I saw some of us using 1 minute for gold, etc. So your 5 minutes time frame is your refined entry time frame. Okay, you want to identify those, and we'll go to the chart right now. Those fair value gaps from the 5 minute time frame. You may not really see them in the 15 minutes, but when you go to 5 minutes, you pick them there and you get your entry. And of course, it will make you get a tighter stop loss. The same thing with the 1 minute time frame, but 5 minutes is just better, more refined than 15 minutes. Okay, it's the middle between 15 and 1, so it's calm. Then of course your daily chart is your bias time frame. Your daily is your bias. I'm referring to not swing trader. They can work for swingers. If you're a day trader, intraday trader, whatever you do, your daily chart is the middle point between your is the best of two worlds between the monthly, which is the highest, and the hourly chart. Okay, or the H4 chart, or even the weekly and the H4, your daily. So it gives you that stuff. Now, another thing is that if you do not have a clear-cut bias from the daily perspective, what price should do for the day that you want to trade, probably do analysis, and I do encourage early morning analysis, right? Now, if after the analysis you are still not sure, you don't have a directional bias where price will run to, either to run out liquidity or to fill up a void, then it's going to be most likely a 50-50 day for you. So you're going to go into that day with some level of uncertainty, and to end up biting you really, really bad. And again, just to recap, I always recommend us to trade fewer pairs. All right, keep your watch list smaller. So that's why when you are in a group like ours, where you have some people trading this and all of those stuff, sometimes to me, it actually negates what we discuss, and some persons would be tempted to get more pairs, and then they'll be distracted and add up, and then start getting unhealthy results. So these are just prep talks and a few things you want to pay attention to, right? So I'm not just going to talk along that line. I am going to share my screen with respect to the MP4. So I'm going to look at pound dollar. I think we all can see the pound USD. The comments. Oops. Okay. Okay. That's my bot is still not functioning. Just give me a moment, please. So I believe you all can see my screen. Now I'm going to go over to the main course content, right, of fair value gap, and then we will now see how far we can go. So I'm going to head over to the 5 minutes chart here. So let me start from 15 minutes chart so you can get the whole picture. This is pound USD, right? Okay. Pound dollar. Now, usually Fridays, like what we saw happen right there, this typical Friday movement. Either you get price return to the middle of the range. That means where price opened right there was almost okay, just went a little bit above the open. So it's basically a consolidation day. So you get that Friday, either you get a consolidation or you get a reversal. You hardly will get a continuation of trend by Friday. So like you saw Thursday push up higher, Friday also continuation. But what did they do? they consolidated. Most of the times, Friday are going to retrace and spend all the day retracing. Then probably next week, they continue going higher. Now, what I'm going to be looking at right now is everywhere we can spot some fair value gaps. Let's start from some of the obvious ones. This is 15 minutes chart, right? Now, you can see this structure right here. In fact, let's start from this one. This one right there, broken by this movement down, right? Broken by this movement down. So I'm going to zoom that in and see if you can see anything there. If I'm not seeing any directional bias, I just want to show something about fair value gap. That's just my purpose tonight. So we are considering this low. Okay. Take that out. In considering structures, most of the time, I consider the body of the candle, not the wick. Else, if it's weak, then this one will be the main stuff. And we understand some of the reasons why that is so, because the bulk of the transaction is in the body, not the wick. This was a rejection. So this is actually the low that was pierced here. But again, we are considering this red candle, all of this low extending time, and then we see this movement of price to break this structure. All right. So I'm going to probably head over to 5 minutes chart and let's see what comes out of that. But before we do that, hope I'm not going to have a funny time tonight anyway. Okay, we're there. So this area is what we are considering, where the structure was broken by this candle. And of course, we identify this as an order block, the last up close candle. And then we look at all the candles that before this particular one that broke this structure, right? So when we look at that, before we go to smaller time frame, you can see this first candle after the order block. Its order block is like an in candle, all right? It's like an inside bar inside this red bearish candle. So it's almost lapping. Then this one comes next. I see how this pierce right into the body of this candle to balance that up, and then it has its own level of imbalance. Let me put that temporal line right where that imbalance started on this candle up to this point. Then this candle that break the structure left a little bit of space right there. Okay. Now, so this is exactly what this is a very tight scenario, but it's the same thing. Now we'll see other examples. Now you see how price returns back to balance that imbalance there, and then decline or cascade lower. Now the same thing we can also look at in this example. So let's just take this right there. That's the structure here, broken. So let's continue to say just put that right there. So it was broken, and then once that breaks, we now, okay, let me take that trend line. So once that breaks, I'm going to put that trend line on where you have the imbalance, which is actually from this structure break in this candle, which that red candle did. Am I drawing out now? So from that space, right, in this there's a little bit of imbalance right there. Okay. And then of course your order block. So en route to the order block, you must consider the fair value gaps there. So this is a fair value gap. Then this candle opened, the space was still not covered. Right there, was still not covered. Then it pierced, cascade lower. This candle, all of these candles still created a fair value gap right there. Okay, and then went up. Now, because price will eventually balance, and that's why you don't chase the trade. Your best of your first, there are times that this fair value gap, they will serve as resistance, just as the way this one right here happened. Price did not come all the way to the other block. Okay, it didn't come all the way back. It came to the fair value gap where it filled and then cascaded. That's the same thing that happens. That it happens, right? That's why sometimes you want to look at live data. You want to get a feel of where they are going to move that thing. So now, one thing I do is that once as a rule or a preference is that, for example, there are two fair value gaps. There's one up, there's another there, just as this example, and price is returning. Okay. Now, sometimes the one you want to consider first is if before this fair value gap right here, there is a, as price is running up, there is a swing high that price breaks the structure. That means it takes out traders here, then they might consider this first fair value gap before coming here. Because again, I'll take that again. If price is returning to fair value gaps, like this example of fair value gap here and this tiny one here, most of the time or sometimes I would want to consider, for example, all of this market structure. All right, so which would price run at? If the moment price breaks that market structure, then this fair value gap or the next would actually be valid, because you want to also look at for fair value gap and liquidity pool works together. All right, they work together. And I'm going to show us something else that happened on Thursday, even in US stock. You see that over and over again. So we have that fair value gap. So all of this movement into Friday, it was not going lower. Okay, there's a little bit of gap. Yeah, of course, this is called, we know it's a downtrend, right? But remember the previous day, an uptrend. So remember the previous day we had, we're not saying this is, we're not doing trend now, we're just doing fair value gap. So let me not get us worked up with that. So all of this retracement back to this line, okay, and even up to this point. Now let's see something. Let's see something. Now, did you see how this candle, this bull candle, let me see what happens so I will speak further. Okay. This bull candle ought to react on this other block. I knew there's a little bit of fair value gap at the top. Okay, it can be covered. But that up close candle cleared that the liquidity resting here. Cleared it right there. So that's why I try to measure the high here and see how it pierced through it. And immediately it reversed to balance it up. And of course, oops, we have fair value gap here, got balance, and they consolidated basically on Friday. Now I want to show us something for, is it Thursday or Wednesday? Now let's see. Okay, I think it's Wednesday. Zoom right in. Okay, I was still going to show us for 5 minutes, right? Yeah. Yeah, so let's go back to our example and look at this area under 5 minutes chart. Why we said it's a more refined, although you have more data, but it's a bit more refined with respect to what you are looking at. Now, you must never forget your trade window, right? You know, this is basically a dead example. We are not looking at trades at this time, late US into Asian session, okay? But we can actually gain a pin or two. Now, you can see you have more data in the 5 minutes chart than that of 15 minutes. Of course, it's expected. So here, you have this structure low, broken, no real. Now, fair value gap, something I should say very quickly, you consider fair value gaps with respect to energetic candles. There must be that energy, not small candles like this. Okay, I didn't say that, not small candles like that. So not small candles like this. You must consider fair value gaps with energy like this one you see right here. This one. So these are what you consider. All these ones, they are basically up and down trade. If you go to 1 minute chart, this is basically consolidation. It does not really give offer much, but energy candles like this are what you consider fair value gap for, right? So once this was broken, this is quite a big candle. So you look at that. Of course, your other block comes there, right, in that green candle. Then fair value gap for this candle that broke the structure started from this point right there, okay, up until the other one. So I'm just going to put that green line and blue at the top. So you can see this is an example of a fair value gap, this huge candle that followed. Had on from this point down to this point that I think got covered not perfectly there. Okay, so we have one fair value gap right there. Now, I think there was a trade on US 30. Let me see if I can bring that pair out. No, rejection, no, market. Okay. One of those indices. If I have that. Okay, it came out. Okay. Okay, so same concept. I'm just going to which was there. Okay, perfect. This is what I looked at on Friday. So of course, we're not looking bearish. It's just on fair value gap. So as of Friday, of course, wearing the market was a bearish movement, right? Now this is a key structure. Price opened, did all this consolidation, created a low. Now this low is important. Why is this low important? Not because of anything other than the fact that when people were buying like this, you have to start thinking like smart money guys. Stop loss was placed there. So this low cleared this liquidity, and this all happened during London. All right. Now this is a whatever that moves during US session, but the manipulation does not stop. So you see how this low is important because it cleared out this one. So people that were going long from here trailed their stop. When we put your stop loss here, so this one came down with this physical energy move, cleared it, and people that were going short put their stop loss just above, and then led to a run above all this area right here, and a run above. Okay, not the previous day's high, so I'll not get to. I thought that actually came above the high of the previous day. Not really, but let me just be sure. Okay, that was US 100. Okay, good. It did run above. Okay, I knew I was correct anyway, but I had to be sure. So this high, as you have seen, was for the previous day. So once they got enough liquidity from this low, all right, they had got to now take out this high, the high of it. People that were shorting all of these, they took them out right there. Now, there is nothing that is in this taking of previous day's high that would have given you a reason to now start going short. That is why you must learn the game of patience. You must learn the game of patience. So once that high was taken out, the new low established is now this one. So I'm going to take out the low, taking out London, and put it right there. I can also put it at the body. Okay, this is what I like doing basically. And I think it is still 15 minutes to approve. So nothing at this point gives me an entry or should give you an entry. You have to be, that's where patience comes in, right? Now you can actually look at several lows here like this one, because once that high is taken, the only way you are going to go now is down, right? They're going to start looking downward to what? Where are they going to go down to? Look at this low of yesterday, the previous day. All right. So these are stuff you want to be doing in your chart. When you open a chart, you want to start marking out liquidities like this. Okay, you want to mark them out. As we were not doing this day, as we were looking at this day, what would I do? You look at the previous day, you have the high of the previous day, the low of the, these high and lows of the previous day will give you clues of what they are going to do the new day. Okay, oops, I ambitiously do that. I want to extend that in time period. Okay, by time I mean this was the low of the previous day right there. So it's what I did. I just extended it for that to know exactly what they're going to do. Obviously, they dropped so hard the Wednesday, all right. And before they will continue going for the next day, they're going to continue. They will take out, they must take out liquidity before price continues in the direction you expect. So one of your job as a trader or an analyst is to determine which liquidity will they most likely take out. Now, based on this thing, I just took us back to, you will see a little bit of liquidity right there, resting above that high before price dropped. So once they came up, look at this one, they took out this one, took out this one. But notice in taking out liquidity, they did not leave at the place of the other block. So they came back to this other block. Now you may be wondering, why not this one? This is extremely bearish condition. In typical bearish conditions, you may want to expect that fib, and there's no how you can tell most of the time unless you go to the daily chart to know if you're going to have a low range midday, and that's what we're doing tonight. So in typical fraction, what you expect them to do is to return back to premium area, which is somewhere anything above the 50%. This right here, from this high to this low, is a range. Here is the 50%. So you typically will expect them to move all the way up to anywhere in this premium. And by come to premium, you now look for the other block in premium zone, which is could be this, could be that, for them to get to before dropping. All right. But for extreme bearish or bullish days, you're just going to take out little liquidity that was created at the close of the previous US session. All right, and then they will continue. And that's exactly what they did on the day. All right, that's what they did. So of course, you know why I took us back. You guys know why I took us back to actually show us these liquidities, how you can use the previous days liquidity, right, to determine what price is most likely. So this was the low of the previous day. They came out, you see what they did, they tested this. This could have been, although nobody should be trading by this Asian. So once they break the low of the previous day, came back to test the other block, they moved high to break out. So this is a very simple, we call this total soup trade, right? But this is not the time you should be trading. Now, let's continue. So what did they do? Finally, after they are taking that liquidity, test the other block, they declined hard against the low, the new low now created. There's a new low created, or there was a new low created on the Asian right here. Did that. And once they did that, look at this energetic candle, right? If I zoom in, it's taking, okay, let's see. Okay. Once this low was broken right here, all right. Now, these, of course, we know the various times. These are times you shouldn't be in the market. So I don't want that to really distract us, okay? By saying times you shouldn't be in the market doesn't mean you shouldn't be. But normally by 4 p.m. GMT plus 1, you should have been taking out your trade for the day unless you are holding. So these are around 4 for the day, all right? So once this was broken right there, this green candle was trying to fill, because something again I have often said that you learn is that up and down movement like this is efficiency. So just as you have this up and down movement is efficiency, rarely would price return back to this area to look for something like the other block to attack. It will most likely return to the fair value gap created at that break or just slightly before the break. Please take note of that. So up and down movement like this is efficiency. rarely will price return back to this other block to give you that entry. It's going to come to the fair value gap created either just before the break or just after the break. So those are the two areas you want to consider. And of course, we talk about what you do with fair value gaps. You are considering the candles with energetic move. So once there's no energy, you better not pay much attention to that because it's most likely going to be faker. So these candles obviously are energetic, all right? Energetic. This right there, that all up to the way the next candle after it, which is this one. Okay, because there's no way you're going to know if the next candle will be great. So from this low right there up to this point is your fair value gap. All right. Now, of course, we have talked about the way we treat fair value gap, just like we will do other blocks. Now, once this candle pierced through this one, the next one followed. That's how you got your fair value gap right there up to this point. So what would be your entry? Your entry is going to be just at the high of the previous candle that because you are looking for short opportunity. All right, let me annotate that for you. Because you're looking for short opportunity, this area is your entry zone, right? And then first of all, I normally want to take out the midpoint of that, which might not be correct because you have to do that with flip 2, right? But these are your areas of interest because the price will rarely not, it will have to come back to that other block you have identified. You end up missing lots of trades. So this area, that high of that, this lower point of your fair value gap, the midpoint of it, and some cases, the premium end of it becomes your entry. So once this green candle came and shoot right there into the fair value gap, you should be shorting right there. Your stop loss can come above the fair value gap. You see, fair value gap can serve as support resistance. Okay, that area there is above the fair value gap. So these are all our fair value gap zones. Your entry is that candle or this, and of course, you should get something from here. Of course, you saw the market was a bit erratic, price return, drop, a news came up, spike, stop loss, came all the way to the, let me clean this. The high end of the fair value gap was tested right there. The price returned all the way to this area right there. Okay, and of course, the other thing happened. So that's a lesson to learn on fair value gap. Let's look at what happened on Friday as I begin to wrap this class up. Okay, so I said this low was important. Why? It took out a low, all right, and then that is a major turning point right there. Now, I wasn't interested personally to take any trade until this low was breached right at this point. And once that was breached, this candle up, okay, I'm going to go back to the 5 minutes. I think we have a more clearer video because normally what I do when I say 5 minutes, this way, a more refined and whatever. So once this is happening at the time of the day, which is you observe, that should be happening around 2:30 GMT plus 1. You head over to your 5 minutes chart to see if you can deduce anything from that, if you can make sense of that. If you cannot see anything with regard to fair value gap, then it's most likely a charade. You don't want to have anything to do with that trade. I guarantee that. Now this is a low, all right, and it got breached by this energetic. This is exactly what you want to be seeing. Massive candles taking out very important lows at the time of the day, US session, for example. So once that happens, the next candle is not what you are entering at. The next candle, remember, will give you that lower boundary of your fair value gap. For example, we already got that high boundary, or you can call it the premium end because we are looking at a short market. And then the next candle, you don't enter, you know exactly what to do. Right there, low boundary. Okay, so this, of course, is 5 minutes. So from this massive candle, you take that, and then you of course get your midpoint, which I have already told us of those boundaries. All right. But I really sometimes don't really go for midpoint. Then you wait for the candles that will enter because they will really come to test these other blocks right there. I'm not saying they will not, but you don't want to lose trade. So your stop loss can safely be above the other blocks, right? But this is the fair value gap entry. Fair value gap entry to serve as an entry signal for you once the next candle moves into the fair value gap. It doesn't have to fill it up completely. That's why I said once it usually the safest entry for me is the exact high. So if I'm using a limit order, the exact high of that last lower candle is where I will put my limit for price to return to. There are times that when a structure is broken like this, all right, you want to, if you start selling there, you will see that price will return. So why hurry? All right, wait for the next candle to form that limit boundary of the high. The low to the high could be this point, all right, and then you see patience. You now wait for the next one to, sometimes it might come down, it does not matter, but wait for the candle that will come inside the fair value gap area. This thing is art. It takes time. It takes time. It takes time. I'll be sincere with you guys. So, but once you start seeing it, you will not unsee it. So you see how this kind of enter the fair value gap area, played right there, got rejected. It didn't come all the way to your typical order block. Because a up and down movement is efficiency. So price breaking this structure right here is efficiency. So the next dealing range is now this fair value gap that needs to be fixed. So this came right there, didn't come to the midpoint, or this could be the midpoint and declined for down. Of course, because even though you have a target to reach in your trade, you must always take out your trade at psychological points, and that's where your liquidity comes in, right? And I already showed us how this area was the low of the previous day, and once that damage was done, price returned to that fair value gap right there. It slammed straight up into that zone. So all that happened there is typical Friday, where price returned to where it opened. This is what you call consolidation. Price opened here, went up, came down, and closed there. This is a consolidation overall day. However, the pattern was presented. Structure broke, price turned to fair value gap, slam. Right? So I saw that happen in lots and lots and lots of trades this past week. Right? Let's see where it's starting. So you want to actually look at now. Again, let me encourage everybody as I wrap this up finally. If need be, go to YouTube, follow ICT, Inner Circle Trader, go through the mentorship courses, all right? Create time for them. Maybe some of you might get, I'm sure some person have chatted me up, and I don't feel any way slighted because it's, so long as you can learn, that's my own. So it doesn't matter how or what means you learn with or from who you learn. For that, like some of us that do post videos like Mr. Sunny and all of those guys, I would prefer you don't share screenshot of your trade, share your setup, share setup. That will help people more. All right, share setup. Setup is what we acknowledge, not results. If you're sharing results, it should be because you have shared the setup earlier. We're not playing competition of who is the best trader amongst us. That's what helps the community. Share your setup. Now, that's why I recommend people, when some persons share their observations, this and that, even though I may not be actively responding to every stuff, because we have various other stuff on the company we're handling and all that. I am personally elated, right? Well, that's the way it should be. That's the way it should be. So I'm using all that to say I do not care who and where and how you learn from. So my goal is as long as you learn. All right. So that's why I'm not I do not hide who my mentor is, where I learn, who you are meeting, etc. Because the thing is that for posterity's sake, we are going to be answerable to ourselves, even not you or in the nearest future. So what's the point keeping any stuff. Vitaly says structural break, which of them should be considered more, the weak break or body break? I personally consider body break the more. I consider body break the more. So you want to do your test, right? But for me, it's body. I look at body. To me, I look at weak as take out as the seat. So where the body ends, that is the close of that candle, is where the retail traders or traders are basically putting much of the transaction. So I consider body. So I'm using that to say again, go to materials on YouTube page for ICT, follow him on Twitter as well. I think I am the inner circle trader there, but that's the name on Twitter. He recently is doing live commentary. The people are great with different stuff. There are things that I cannot basically do. They are nice, but I don't have that luxury. He loves it, and I feel it's going to help your progress, and that's why I shared it recently in the group. Okay, so if you have been having lots of hits recently with respect to accounts, my encouragement is stop trying to do recoveries, and I think that's one of the updates I'm going to give us in the coming week, right? Recoveries will hurt you the more. You want to stop going live and do demo. All right. Now, I have a dream, I have a passion, and nothing is making us backing out from it. And I'm going to let all of us on the know pretty soon, right? So I'm using all those many words to say, yes, sir, thank you. Do your job, do your practice, and if need be, recently I was trying to put up something on my status on an alternate stuff that can be maybe take your time off trading, not off trading basically, but off too much what's it called now? Screen time. Okay, this thing can get addictive, right? But an alternative. I know most of us are already into other business than the rest. Okay, so like something like a leisure, so you not be too addictive to that. You must trade. Someone posted in the status trying to give people signals. I think it's part of us, so I had to look at the talent. I was like, I don't know if he's here anyway. Don't call the name. So I was like, this thing is not. But I didn't really give him the reason for that because it's not a competition. It's not a charade, right? Just make your progress and do what you are doing, right? Because eventually people will still do what they want to do. Okay. So that's all I have for you all tonight. I hope it's quite valuable. And yeah, I'm going to update us again for the last time just before the weekend. Thank you all so much for joining. I'm going to open the group, all the groups just before the market opens, and activities will continue. All right. Thank you all so much and have a lovely night. Signing out, Jay.